What's up, everyone? Welcome back to my YouTube channel. Today we are gonna talk about trading and gambling. A lot of people text me in the Instagram page and also my close friends that they don't do trading. They are telling me like, hey, trading is like gambling. Why you do that? How you do that? I think you are gambling money. I think that you are losing money. And then I show them the proofs and they say like, oh, but you are just lucky. And I'm gonna prove to you guys that in trading, it's not luck, it's skills and discipline. So I understand why they have this opinion, because at first trading and gambling can look like the same thing. Both involve risk, uncertainty, and the possibility of big wins or losses. But in reality, trading is a completely different game, and today, guys, I'm going to explain to you why. Okay, so let's start by asking these questions. Why do trading and gambling get compared so often? And the answer for that is very simple. Because both involve the probability of making or losing money. And people think that you have to work for money, not to make your money, not to use your money for making more money. If you do this is gambling, and everything that it has to do by risking your money for making more money. For normal people, this is called gambling, but that's not true. This is how the rich people make money. They don't work for money, they put their money to work for them. So in trading is the same thing, but why it's different from gambling is because in trading we have more tools, and once you build your skills, once you learn the technical analysis, once you focus and learn on the fundamental analysis, what makes the price to move up or down, and once you understand these concepts, everything starts to make sense. It's like a puzzle. When you start to collect all the pieces, the big picture starts to get to be completed, and you have a clear vision after that. So in trading, many people look at the market and they say like it's a 50-50 shot. Either the price goes up or it goes down, right? So, and on the surface that's true, so for this is one of the simple reasons why I can say to every one of you that trading is not like gambling. Because like if you are here right now without any knowledge about how to trade, and we decide to take a trade right here, we have 50% chances. If we take a buy, we have 50% chances that the price will go up, and we have 50% chances that the price will go down. Because there are some times that the price just consolidates and stays in the middle, but that will not last forever. The price will either go up or come down sooner or later. So this makes our probability of winning or losing 50-50. So if we take, let's suppose 100 trades, 50 trades we are gonna win, and the other 50 trades we are gonna lose. So this will bring us at the break-even stage. So we don't lose, but in the same time we don't make any profit, we don't make any money. But if you go and gamble, it's completely different thing. And I'm gonna take the example of the roulette, that is one of the famous games, and the one that has the highest probability for you guys to win. I'm gonna give you some real examples about that. Okay, so now we are back, and here is the roulette simulator, and I'm gonna give you the example. So as you can see, at first it looks like you have black and red squares, you know. So at first it may look like even here it's 50-50, you choose black or red. But then we have this green square, and actually right now the ball is here. So if we go with a simple strategy here and we bet on red or black, we are not at 50-50% win probability of winning or losing. Why? Because of this green box, green square. It can change in the long run to approximately 53% for the casino and 47% for the players. We can give a try, like we can bet at the red square right now. We spin and we see
9 red.
Perfect, we were lucky and we won. Let's go and bet on the black, and let's spin.
6 even black.
We won again, so I think I'm pretty good in this. Let's try again one more time. Go to the red again this time.
22 even black.
So this time we lost. Okay, let's try again. Red again.
13 odd black.
So we lost. We are break even so far. We won twice, we lost twice. And one more time, I'm going again to the red one.
34 even red.
Okay, so now I won. So this is like how it goes with trading if we are 50-50, but still here we still can lose even if we choose both options. If I put a bet like in both of them, like one, I can do it right now, one in the red and one in the black, and I spin, there is still a small probability that is going to
15 odd black.
to go to the green one. It's a small probability, but this one changed the whole game from the casino. That makes the casino profit in the long run. And this is the highest probability for the players to win, like for the highest probability gambling game. But here, you know, we cannot focus in any strategy or nothing. We just play red or black, and then we see if we are lucky enough or no. And I'm going to spin for one last time, and I'm gonna increase my bet size this time. I'm going with the red.
29 odd black.
Okay, so we lost. Let's leave this. This is gambling, guys. Stay away from this. Focus on trading more. Okay, so now we are back again on the charts, and I'm going to delete this, and now I'm going to explain to you that why with trading, if we can learn the technical analysis and if we understand the fundamentals and if we have a really good risk management strategy, we can be in profit and the probability goes on favor of us, the traders. So right now I'm going to do a simple chart analysis. Like, let's see here, there is a resistance. Let's do with this one. So here we have a resistance that comes back here, the price rejected here, and then went sell, and here is rejecting again, 1, 2, 3. So with that, we understand that after the price went sell, it found a small support here, it broke it, and then another support right here. So what happened, it went up. Here it didn't push that much, so this is a weak resistance, but still we mark it out. And then here we see that we already broke it. It came back, and then we found another support right here. But if we see, we always have to focus on the past, because as we say, the history repeats itself. But for right now, if we draw this line, I'm 100% sure that this point right here, somewhere in the past, it was a support, or yeah, it was a support. That's why it stopped there. So if we go back, okay, boom. Perfect. Here, zoom it out. So here the price went up and became a resistance, but when the price comes down, the resistance turns to be a support. So this is one point, this is the other one, and if we go in the past, we can find more. Yeah, another one here, here, here. So these small details, they show us, like, they give us a hint. We start to analyze the trade better, and then we go back and we see that it broke up, and once it broke up, we have this engulfing candlestick that is twice of the size of the previous one, and it means that there are more traders taking buys right here. There is more volume for buys, so the probability increases in our favor. After we have these two, that we have a support, we broke above it, we came back to retest, and then we found another support, and then we have this candlestick, engulfing candlesticks, that is twice the size of the previous one, that is called the engulfing candlestick. We have three confirmations. So with 3 confirmations, from 50-50 probability that we used to be before, by adding these 3 confirmations, like we go 60 or 65, like usually I consider it one confirmation, 5% chances, that increases our probability that to be in the right direction. So at this point, we wait for the candle to close, and then we take the trade right here at the highest of this previous candle. And with a risk reward 1-to-1, the stop loss goes below the previous candlestick, because if the price breaks this low, then the trade will go lower, and no need to keep the trade open to lose more. We just accept the loss, and then we go to the other trade. So if we do in a simple way, just 1-to-1 risk reward, this would be a winning trade. But we can hold also longer, and if we, after, for example, it depends, you set some rules, the risk reward hits 1-to-1, you can move with the stop loss, you go to break even, and maybe you take some partials, 80% here, and leave the rest to run for a higher risk reward, but these are the tools that they change the game. These are what makes us profitable. But in this case, we could have get a 1 to 1.5 easily. And yeah, you just need to be patient and disciplined, and to let the trade run, to trust to your strategy, to your analysis, because right here we would have been in drawdown and so close to hit the stop loss, but you can manage the trade or you can let it run. Depends how you set your rules and how you follow your strategy. You just don't need to be emotional. That's what makes people lose money in trading. They start to be emotional, they start to do over trading, they start to do over risking, and they think they can make the losses back, and they lose and lose and lose again. So if you don't respect the rules that you set to yourself, if you don't follow the strategy strictly, then you are not gonna make it on trading.